What's going on, guys? I hope all is well. This is Rico. I appreciate you guys watching this video. Hit that like button and subscribe to the channel. So I wanted to talk about the recent stock market volatility and what it means for your wallet and what it means for all of us. So the stock market has been going up and down over the past week because we have a lot of news that's been going on, and news can really cause the stock market to be volatile, to be able to go up and down. So it's very important you stay on top of the news because it can definitely impact your money. And it's good to know what's going on so you can know how to maneuver and just kind of stay up to date. And obviously we have a lot of things going on with the government shutdown right now. That's been impacting a lot of people, obviously, in the markets. And then you have the Federal Reserve. People are wondering, what they're going to do as far as this rate cycle, as far as cutting rates, what's their plan going forward. And then also you have the tariffs that's been going on as well. And the U.S. and China have been going back and forth, especially over the past, week about, negotiations, and things have been breaking down. One moment it'll seem good, and then the next moment everything will be broken down. So that's been one of the main catalysts as far as with the stock market going up and down. And the president of the U.S., he's been delivering remarks and posting things and saying things, and that's been a driver of the stock market going up and down because he mentioned recently about, China has been playing hardball, and if they don't really negotiate, then those 100% tariffs will be on the table starting November 1st. And then, after that, he delivered a remark stating that he believes China is going to do the right thing and that everything's going to be fine. And then after that, he delivered another remark stating that China, is doing this and they're not playing the right game, and those tariffs are on the table for November 1st. So, it's just been going up and changing and changing. And also China has been doing a lot of things as well. They've been doing bans on certain U.S. companies. And also they've been doing certain things as far as imports as well to not deliver things to the U.S. So it's been a lot of things going on back and forth. So I came here to tell you that you have to just stay focused on your portfolio. It's going to be a lot of news that's going up and down, but you have to analyze from this standpoint. With this news that's going on, is it changing the fundamentals of the companies that I have in my portfolio? That's one of the main things that you have to kind of look at. What is going to be the impact on some of the companies that I have in my portfolio? And especially if you're a person who invests in individual stocks. So say, for example, you have a company that sells, phones, for example. And if, U.S. has 100% tariffs on phones that's being brought in from China, that company that has those phones, they're going to pass those taxes or pass those costs over to you. And how would that impact their performance? How would that impact their bottom line? And so you have to look at it from that standpoint and look at those companies that you have as far as who's going to be impacted by tariffs and who's not going to be impacted, and then analyze it going forward to see how would those companies be impacted by tariffs, and what will their balance sheet look like? What will their earnings look like? So that's one aspect to look at as well. But the second aspect to look at as well is to keep investing, because I firmly believe that the stock market over the past 100 years has always bounced back from these type of things. I like to look back at the different crashes, that happened during the pandemic, that happened in the early 2000s, that happened in the 90s, that happened in the 80s. And per history, the stock market always rises back up. So it's very important to know that and not be scared out of the stock market, but look at it as a way to, stay the course, essentially, because it can get ugly. When you see your portfolio is green, and then after a tweet by the president, your stock market portfolio can go down to red. So it can definitely be, not good to see, but you have to stay the course and not just sell everything and not just sell a position just because you see things going on. You have to be able to keep going forward and stay the course, knowing that the stock market, on average, always bounces back. And the third thing is look for opportunities. That's what the 1% do. That's what the hedge funds do. That's what the institutional investors do. They look for opportunities. Do you think, these institutional investors, when the stock market is down, they just sell everything and just go away? No, they look for opportunities and they buy up stock. So when the retail investors sell stock, they are the ones who are buying stock and pushing the prices up. So it's very important to look for opportunities and think like a institutional investor and not like a retail investor. Look for opportunities when everything is red. Don't just state, hey, I'm going to not invest right now because the stock market is down, but look for opportunities in good companies. And that's how you really build wealth, is when everyone is scared, that's when you pounce on opportunities. So I just want to share with you guys because there's a lot going on, but it's very important to stay focused and know there's always opportunity in the markets, and there's always opportunities to be able to make money if you don't leave the market. So just want to share with you guys. Hit that like button, subscribe to the channel, and let me know in the comments what you guys think about this situation, and let me know what things that you are doing in order to move forward and build wealth. So I appreciate you guys. I'll talk to you guys soon. Peace.